make no friends in the pits and you take no prisoners. 1 minute you're up 500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Well, a lot went on this week while I've been here in Santa Barbara on vacation. You know, I'm actually heading down to Los Angeles in the morning, where, of course, there's also some riots going down as the president has sent in the National Guard over the objection of Governor Newsom. So that's another story. I'm not really going to talk about that on this podcast because I got so much else to talk about that I don't really think I have time to get into that. But a lot happened in the markets and big blow-ups going on politically, which have implications, I believe, for the markets and for certainly the investment strategies that I've been talking about on this podcast. But I want to start off just by talking about the data that came out on Friday, the jobs data. And, you know, one of the things that I've been talking about on this podcast for a couple of years now, at least, is the tendency of these jobs reports to come out stronger than expected. And, you know, I've been saying for quite some time that we have a weak labor market, that despite the fact that we constantly beat the jobs number, that the labor market is weak. I've been saying the economy is weak. I've been saying that, you know, I think we're in a stealth recession. Stealth because the numbers don't actually reflect the underlying weakness in the economy. And I think part of the reason for that is that the inflation is understated in the GDP deflator. It's understated in the CPI too, but I think all the government measures understate inflation by design, or the impact that inflation has on prices. And when you do that, you can statistically create economic growth out of thin air. You can make it appear that a contracting economy is expanding. But if you're actually living in that contracting economy, you're not fooled by the sleight of hand. And that's one of the reasons, and maybe the main reason, that Donald Trump won the election and won it by the margin that he did. He didn't just squeak by, is because the economy was a lot worse than the statistics would suggest. And that's why I was pretty convinced from the very beginning that Trump would win. When a lot of people thought, well, it was a toss-up or maybe he'll lose, I knew that the election would turn on the economy. And in fact, all the exit polls confirmed that people were voting the economy. And so the numbers didn't tell the real story. And once again, the same thing happened on Friday with yet another jobs report that the markets and the financial media reacted to as if it was good news, as if, aha, see, the jobs market is strong. The economy is better than people think. And of course, Trump is going to take credit for the strong jobs report. As soon as this so-called stronger than expected jobs report came out, the markets reacted. The stock market rallied, bonds sold off a bit, the dollar rallied, gold sold off because, the economy is better than we thought. Now, of course, I think that investors were bracing for a weak jobs number, because I think a weak jobs number is coming and is long overdue and would be more reflective of what's actually happening in the economy. In fact, if you go back to earlier in the week, on Wednesday, again, we got the ADP jobs report, which was considerably weaker than expected. This is just measuring private sector employment. The consensus was for 110,000 jobs created, and we only got 37,000, way below the range of expectations on the ADP number was from a low of 70,000 jobs to a high of 180,000 jobs. And we only got 37,000. So way below the low end of the range. And they even slightly revised down the 62,000 jobs from the prior month to 60,000, which was also a weak number. But now sequentially, you've got a 60,000 job number from April, which was weak. And now it's 37,000 in May, which is even weaker. And also, we got another rise on Thursday. We get the weekly jobs reports that come out every Thursday. And initial jobless claims were up 247,000. That was an increase from the prior week's 239,000 and above the 235,000 that people were expecting. So we're continuing to see a increase in unemployment rates. So I think that set the tone for the expectations that the jobs number would be light, would be a weak number. So I think that the markets didn't just react to the fact that the official jobs number was higher than expected, but that it wasn't lower, that the whisper number, what traders were potentially looking for, was a miss. And so the fact that people were looking for a miss and we ended up with a beat, I think that's part of the reason for the market reaction. But anyway, let me actually get to the number. And the number we got, the consensus was 129,000. And we got 139,000, a beat, but only 10,000. It's not a big beat, but it was enough for everybody to talk about how the number came out better than expected. And of course, that's a surprise if you were looking for the number to come out weaker than expected. But once again, we had downward revisions to the prior 2 months. For example, the April number that was reported at 177,000 last month was revised down to 147,000. So that's 30,000 down. But they also revised down the prior month even more. So if you look at the downward revisions for the 2 prior months, it was 90,000 jobs. So 90,000 jobs that they told us were created. Now they're telling us, oh, we were wrong. We didn't create those jobs. But we did create 10,000 more jobs in May than everybody thought. And so once again, the markets look at today's number and ignore the revisions. In fact, the last 4 jobs numbers have all been revised down in subsequent months. That's how many we've had since Trump's been president. So every single jobs report that we've had since Trump took office has been revised lower in subsequent months. So what are the odds that this number that we got Friday, 139,000, what are the odds that it doesn't get revised lower than 129,000? I'd say it's pretty slim. It's very likely that next month, when we get another number that beats whatever the expectation is, we're going to find out that this number from May was actually a miss. And so while the markets were heralding a strong jobs report because it beat expectations, it actually didn't beat expectations. In fact, there's no way that this can be a random coincidence when just about every jobs report that came out under Biden, certainly the last year or two, was revised down. I mean, every once in a while, maybe 1 out of 10, I don't know, was upwardly revised. But if it was just random, you would expect half the numbers to be revised down and half the numbers to be revised up, right? It's a coin toss. But if 90% of the numbers are subsequently revised downward, that tells you that it's not random. There's something flawed in the methodology that causes the government to overestimate jobs when they initially come up with these statistics. But that in subsequent months, they figure out what they got wrong, and then they downwardly adjust the number when they get more data. To me, they probably shouldn't even release the numbers when they do. They should probably release the May numbers a month later when they actually have the data. This whole game about coming out with a report that is absolutely meaningless, because we know that we're not going to get the actual number for another month or two. And sometimes we don't get the number for a year. They go back a year later and revise everything down. So all of this is just a bunch of political noise. But it's amazing that the politicians take credit for it. The financial markets react to it, because all these numbers that get celebrated as beats, we find out later that they were in fact misses. But every week or every month, the only focus is on the headline. It's not on the downward revisions. Meanwhile, looking again at the statistics here, the unemployment rate stayed at 4.2%. Nothing really big there. But look at manufacturing, down 8,000 jobs. Now, there was an upward revision to the prior month where they went from minus 1,000 to up 5,000. So last month wasn't as bad as they first told us in manufacturing. But if you net out this month and last month, it's worse than expected, because they were expecting unchanged for May for manufacturing. The job leaders were healthcare and hospitality, hotels, restaurants, bars. But healthcare was by far, I think it was like 60,000 jobs, something like that, were created in healthcare. Now, a lot of those jobs end up being government jobs. Net government jobs were lost, but a lot of the healthcare jobs are government related. But, when you create a lot of jobs in healthcare, when you create a lot of jobs, in hospitals or in restaurants, you don't create productive jobs, in that hospital workers and waitresses are not producing goods, the type of goods that we're importing, right? They're service sector jobs. And so to the extent that waitresses and bartenders spend their earnings, they're buying products that they didn't themselves help to produce. It ends up putting more upward pressure on the trade deficits and consumer prices. We need to be creating goods producing manufacturing jobs. And despite the tariffs, we're continuing to lose those manufacturing jobs. So again, this is another weak report that followed a lot of other weak economic reports that came out during the week. In fact, I'll go over a few of those weak reports. I think one of the most disturbing of the batch was the productivity numbers, especially if you're hoping for lower inflation. So Q1 productivity, which was originally reported at minus 0.8, was revised to minus 1.5%. That is huge. That means labor productivity is going down. So we're spending more money and getting less output. And one of the real reasons for that was the increase in unit labor costs, which were expected to rise by 5.7%, which in and of itself is a pretty big increase in labor costs. But it turns out that labor cost went up by 6.6%. So this is more indication of inflation, inflationary pressures that are pushing up labor costs that are ultimately going to be reflected in consumer prices. And one of the ways that you offset the effects on prices that inflation has, the government expands the money supply, expands credit, and people spend that money and bid up prices. Labor productivity can offset that, because labor productivity, rising productivity, can reduce prices and offset some of the impact that inflation has on increasing them. But if labor productivity is falling, well, now that puts additional upward pressure on consumer prices. So the idea that inflation is dead and buried, which is a point that Donald Trump and his administration continued to make, that the inflation problem has been solved. There is no evidence that that problem has been solved. In fact, all the evidence suggests that the problem is going to get worse. Now, we got a big drop in the trade deficit in April, a collapse actually, from 138 billion in March to 61.6 billion in April. But it's not because we had an increase in exports. No, it's because we had a collapse in imports because of the tariffs, right? So this is an indication, obviously, of a future economic slowdown because fewer products are going to be on the shelves. And that means higher prices for those products. You know, even if they haven't come yet, I hear a lot of the people in the Trump administration pointing to the fact that, oh, look, the CPI hasn't moved up yet, and we've got these tariffs, and that's proof that the tariffs aren't causing inflation. We haven't had enough time because prior to the imposition of those tariffs, companies stocked up on a lot of inventory that wasn't tariffed. So there is going to be a lag between the imposition of the tariffs and the price increases that follow as the people paying the tariffs look to recover that cost. You know, by the way, we also got the Challenger jobs cuts report, another big month of jobs reductions, not as big as April, which was 105,000 layoffs, but May was almost 94,000. So these were big numbers, which again, we got that number before the official jobs number came out, which was another indication that we might have got a weak report. But again, at some point, the markets are going to probably resign themselves to the fact that we're always going to get these strong reports. This is part of the flaw in the way we keep track. We don't get the real number until a month or two later, if then. So eventually, you know, the markets are going to ignore this until eventually, I guess, the jobs market, the labor market is going to be so weak that, you know, the numbers are going to be bad. Now, of course, by the time we get a bad number, it's actually going to be much worse than the bad number suggests, but that is coming. Anyway, look, got a quick commercial break, so stick around. Got a lot more to talk about. We'll be right back.
It's an interesting time for business. Tariff and trade policies are dynamic, supply chains squeezed, and cash flow tighter than ever. If your business can't adapt in real time, you're in a world of hurt. You need total visibility from global shipments to tariff impacts to real-time cash flow. That's NetSuite by Oracle, your AI-powered business management suite.
Over 41,000 businesses have already future-proofed their businesses with NetSuite by Oracle, the #1 cloud ERP. NetSuite brings accounting, financial management, inventory, and HR into one fluid platform. With one unified business management suite, there's one source of truth, giving you the visibility and control you need to make quick decisions. With real-time insights and forecasting, you're peering into the future with actionable data.
And with AI embedded throughout, you can automate a lot of those everyday tasks, letting your team stay strategic. NetSuite helps you know what's stuck, what it's costing you, and how to pivot fast.
NetSuite is the platform that I would choose, and you should too.
It's one system, full control. Tame the chaos with NetSuite. If your revenues are at least in the 7 figures, download the free ebook Navigating Global Trade, 3 Insights for Leaders
at netsuite.com/gold. That's netsuite.com/gold. All right, before I get into the big action in the silver market and the rest of the precious metals complex and the breakup of the bromance between Elon Musk and President Trump, I'm going to talk, I'll just mention a few other economic statistics just to point out the weakness, the underlying weakness in this economy. And this is even before the effect of the tariffs kick in. I mean, they're going to kick in. It's just going to be the second half of this year. And we've got more economic weakness that's coming, as well as more inflation. Because, by the way, you know, one of the reasons that inflation has come down is oil prices have come down. And Donald Trump, again, he keeps taking credit for oil prices coming down. But oil prices are not coming down because of drill, baby, drill. In fact, if you look at the numbers that came out again Friday, the Baker Hughes rig count, it's down again. I think the 5th month in a row. We're like at a 3 or 4 year low right now in oil drilling. So it's not drill, baby, drill. It's chill, baby, chill. The reason that oil prices have come down are because OPEC increased production a few times, despite the fact that the trade war caused demand to decline. And so that's the reason that oil prices are coming down. It's not because the Trump administration has done anything to reinvigorate the labor market. If anything, if Trump wants to claim credit, for lower oil prices, he can say, well, my economic policies are raising the risk of a recession, and that's the reason oil prices have gone down. But if you look at the last couple of weeks, oil prices are way off the lows. Oil prices are up maybe about 17%. We're back above $64 a barrel. We were down about 55 on the low. And so we've had a pretty big reversal. And I think now you're going to start to see, oil prices going up. So that is going to be another reason that the CPI numbers are headed higher. But anyway, some of the economic data, the PMI for May was still above 50, but lower than expected. It was at 52. It was supposed to be 52.3. That wasn't that big a miss. But the ISM manufacturing index was a bigger miss. It was supposed to improve from April's 48.7 to 49.1. Instead, it contracted to 48.5. So the manufacturing recession continues. So far, the tariffs have not helped. And in fact, the tariffs are going to hurt. More U.S. manufacturers are going to be harmed by the tariffs than helped. And so I expect that number to continue to move south. Construction spending was down. It was supposed to go up. In fact, it was the mirror image of expectations. I guess the only good news was it wasn't as bad as the downwardly revised March number, which was originally reported as minus 0.5, and now it's minus 0.8, and it came out as minus 0.4. Year over year now, they were looking for up 1.2. It's down 0.5. And the prior month was up 2.8. So a big collapse, and it's going to get a lot worse. Donald Trump, I forgot to mention this on my last podcast, but Trump doubled the tariffs on steel and aluminum from 25% to 50%. And, I was watching an interview with Treasury Secretary Bessent about this topic. And he was asked specifically, how do you think that, these 50% tariffs on steel, how is that going to affect the home building industry? And he said, well, I don't know how it's going to affect the home building industry, but I know it's going to help the steel industry. And then he moved on. That's the point. Yes, sure, it may help the steel industry in the short run, but it's going to hurt the housing industry in the short run by increasing the cost of production. Look, everybody who uses steel, who uses aluminum, is going to be harmed by the fact that they have to pay more money for steel and aluminum. Now, yes, in the short run, that's great for the steel and aluminum companies because they get to charge higher prices. But in the long run, it's actually bad. And here's why. If the customers of steel and aluminum companies are harmed by higher steel and aluminum prices, and as a result, in the long run, some of those companies go out of business, they lose out to foreign competitors who get better prices on steel and aluminum, the industry contracts. So your customers are being harmed by these high prices. And so in the long run, you have fewer customers. And so, yes, you're getting more money for your steel, but you're not selling as much steel or aluminum because your customers have been driven out of business. So in the long run, the tariffs actually harm the industries that they're trying to protect. And they actually lead to layoffs in those industries because if I'm not selling as much steel because my customers went bankrupt because of steel tariffs, well, I'm going to fire people too. So not only did construction jobs get lost or automobile jobs get lost, but the steel jobs end up getting lost too. But the problem was Scott Bessent said, well, I don't know. I don't care how it's going to affect the housing market. I only care how it's going to affect the steel market. Yes, because that's the problem with government. They care about the seen. They ignore the unseen because everybody can see if you're a steel worker and now you're making more money because of my steel tariffs, I can take credit for that. I can have a photo op at a steel factory and say, you see, my tariffs caused these workers to make more money. And they all applaud me and everything looks great. And I get donations from the unions who represent the steel workers. But when someone loses their job at an auto plant or at a construction company, I don't have to accept responsibility for that, right? There is no photo op for that. That just happens. And there's no direct connection between those lost jobs and my tariff. So I just accept credit for the good things, but I'm never held accountable for the bad things. So that's why politicians do things like that. They do things that are harmful overall, but which create pockets of winners that they can take credit for, even if the losers outnumber the winners and there's overall harm done to the economy. Anyway, the final number I want to mention is ISM services number, right? The service sector. The May number was supposed to come in at 52. It came in at 49.9. That is contraction mode. So that is the service sector contracting along with the manufacturing. And so that's a warning sign of recession. In fact, the consensus range was 50.8 on the low end to 52.5, and we got 49.9. So again, those are all the weak economic numbers that came out during the week. Yet the week ended on a note where people were celebrating this phony jobs report as being strong. But the real story is the underlying weakness in the economy and the strength of inflation. Inflation is going to come back with a vengeance in this recession. It is going to be stagflation. Anyway, prior to getting the jobs number, we had a big breakout in silver. And I've been talking about this on this podcast. I've been telling people, buy silver, buy silver. I didn't think it was going to go below 30. I was saying $30 silver is like $2,000 gold. And, telling people to buy it, $32, $33, very little downside. I knew eventually it would break out. And on Thursday, it did in a big way. I think, we were up almost $2 at one point, or Friday rather. But silver not only broke out above 35, the same day it broke out above 35, it closed above 36. And as I'm watching prices live now on Sunday night, it's about 9:15 out on the East Coast. Silver's trading at 36.08, above 36 again. Gold initially was moving up with silver, and it got back above 3,400, but it actually sold off earlier in the morning. And then after the jobs numbers came out, it sold off more. And in fact, Thursday was the big move up in silver. It had a big move up Thursday, but then it moved up again because it didn't close. It added about 50 cents, right? It had a big move up on Thursday, up about $1.50, and then it jumped another 50 cents. But silver stocks on Thursday, a lot of the silver stocks were up 9, 10, 11. I think the biggest one was a 15% gain in First Majestic. But other silver stocks were up, 9, 10%. Even the silver stocks mostly pulled back on Friday because I think the weakness in the gold market and the strength of the stock market caused selling in gold stocks, and even silver stocks pulled back. But the significance of the breakout, I think, is important. And I think one of the reasons that gold sold off, and it didn't get killed. I mean, gold's still about $3,300 an ounce. Right now it's $3,305. It's off about $5 in this early Asian trading. But I think one of the reasons for that was unwinding of spreads. And here, as I'm watching, silver's on the high of the night now. It's up a dime at 36.12. A lot of people have been trading spreads where they're long gold and short silver, right? Because that trade has been working. We were 100-1 in the gold silver ratio. And I actually think that it wasn't just long gold, short silver. People were long gold, short platinum. I was talking on the last podcast that I did that people should buy platinum. I was looking at platinum and it was still below $1,000 an ounce. The last time I talked about it, it was under $1,000 an ounce. And I said, this is ridiculous. You can buy more than 3 ounces of platinum with 1 ounce of gold. Well, last week, platinum broke out. It's almost at $1,200 an ounce right now. It's at $1,175 down, but it's up about 20% in a week. And not just platinum, palladium, which was also around 1,000, is now, now it's 1,067, not up as much, but still, this is a huge move up in the precious metals complex. So it's not just gold. The other precious metals are moving up too. And I think what's happening is these spreads where people are long gold but short silver are being unwound. People don't want to make that bet anymore because they see that the tide has turned and that silver is going to start to rally. And so they don't want to be short silver anymore. Now, maybe they don't want to be long gold either if they have to unwind that spread. They were simply trading the spread versus making a real directional bet because they might have thought, hey, gold prices could go down and silver prices will go down even more, right? So the spread traders may not have cared which direction gold and silver went. All they cared about was the difference between the two. But now, if it looks like silver is not going to underperform gold anymore, you're unwinding those trades. But I think that is very bullish for all of the precious metals, including gold, because one of the things that has been, odd about the gold bull market that has been going on for a long time now is the fact that silver has not really participated. Because in most historic bull markets in gold, silver has not only participated, silver has led. When we've seen a big move up in gold, we've seen a bigger percentage move up in silver. We haven't seen that yet. And I've gone over the reasons why, the predominant one being that this has been a central bank-led gold rally, and the central banks don't buy silver. They just can't store it. It's not the monetary metal that they hold. It's more private investors that buy silver. Retail, small investors, even the bigger hedge funds are more likely to be active in gold and silver. So the man on the street has not been involved in this market for whatever reason. Either they've been sidetracked by Bitcoin, or they're just speculating in other tech stocks, or they're just not even bothered. They don't even feel the need to buy silver. They don't know anything about it. They don't think about it. And so you haven't had the rally that you typically had in a precious metals bull market. Well, if that's going to change now, if the breakout that we had last week signals that, okay, silver is finally joining the party, I think that's good news for the entire sector, including gold. I think gold will do better in an environment where silver is outperforming. So people will make more money percentage-wise on silver, but they'll make more in gold because silver is rising than if silver wasn't rising. Silver was, the weakness in silver was kind of a drag on the gold market. So imagine how much stronger gold would be now, how much higher the price would be if silver was going up. Because if silver was going up, that would mean the public was involved in the market. And they would also be buying gold. They wouldn't just be buying silver, because it's been the central bankers that have been buying gold, not the retail investors. That, I believe, is going to be starting. And gold just needs to, I think, close above 3,500, not just 3,400, but that would be a new high. Gold got close to 3,500 last time around. But this breakout in silver, the breakout in platinum is a bull market in precious metals. And it's not just precious metals, industrial metals. Inflation is reacting. And it's also having to do with the breakdown in the dollar, because the dollar index is still below 99. The euro is still above $1.14. So I think we're going to see a lot more downward pressure on the dollar and upward pressure on commodity prices, especially given what is now going on in Congress and with Elon Musk and Trump, which really is the biggest story. And I kind of maybe saved it for last because I think it is the most significant event. But it's also one of those things where I can say I told you so, because I did tell you so. And in fact, I told a lot of people this, a lot of my clients, because I had a lot of clients, and I mentioned this on this podcast, but I had a lot of clients that after Trump won the election, they closed their accounts. And the reason they did that is they said, Peter, look, I get, I've had money with you because I've been worried about the debt problem. I've been worried about the dollar, but I'm not worried anymore, because now Donald Trump is finally going to fix it. We've got Elon Musk, we got Doge, and we're finally going to be serious. Trump is serious. We're going to actually cut spending. We're going to cut trillions out of the deficit. The dollar's going to strengthen. We're going to have all this deregulation. Everyone's going to want to invest in America. And so this is not the time for your strategy. I don't want to be invested outside the dollar. I don't want to be in gold stocks. which, was a disastrous decision because, gold stocks are up 50% this year. People that cashed out in November, December last year missed out on that. And of course, foreign stocks, while the U.S. market is down, you've got foreign, markets up 20%, 25%. So it was a horrible time to, bail out on my strategy. I mean, it was really the time to go all in on my strategy. But what I was telling people and what I was telling people on my podcast was, look, I've seen this movie before, right? Many times, including with Trump, right? Not just Trump, but all the way going back to Ronald Reagan, when Ronald Reagan ran and, he was going to clean out the waste, fraud, and abuse. They had the Grace Commission, right? A lot of fanfare with the Grace Commission. And they came up with all sorts of recommendations on how to cut waste, fraud, and abuse. But none of it was actually enacted by Congress. And I said that Doge was going to meet a similar fate, that at the end of the day, you were not going to get any significant spending cuts passed by Congress. And I also talked about the layoffs. And I said, yeah, Donald Trump is talking about laying off federal workers. And I said he's going to find that you can't do that because they're protected by labor unions and other laws. And more of these layoffs are being thrown out in the courts. The courts are saying you can't do that. The president can't fire these people, right? So everything that I said was going to happen that was going to prevent any cuts in deficit spending has in fact happened. And what really shines a light on that is the big, beautiful bill that doesn't incorporate or codify any of the Doge cuts into actual law that increases government spending. I've been saying this since the very beginning of the big, beautiful bill. I didn't wait for the House to pass it. I've been talking on this podcast, right, that the big, beautiful bill is big, but it ain't beautiful. It's ugly because it's not only full of pork, but that it preserves all the increased spending under Biden and grows it and throws tax cuts on top of that. And I warned people, I said, look, Donald Trump already campaigned the first time on cutting the deficit and he increased it. He didn't cut anything. He signed off on every unbalanced budget, every increase in the debt ceiling. And people said, well, he didn't have Elon Musk. Okay, he doesn't have Elon Musk anymore either. And I knew that Elon's efforts would fail. Not because I didn't have confidence in Elon, because I don't have confidence in Congress. And I didn't have confidence in Trump to have the political courage to do what needed to be done. And that is what's responsible for this fallout. Because I guess, Elon Musk was there, and, he officially left, the White House to go back to running his businesses. But while he was there, he worked very hard and he was committed to, changing the game, changing the trajectory of the country. He really wanted cuts in spending. And I believe that Elon Musk believed that Donald Trump wanted the same thing, because I'm sure that as a candidate, Donald Trump told Elon Musk exactly what Elon Musk wanted to hear. You're my guy. You're going to come in. You're going to go through the government. We're going to get rid of all this waste, fraud, and abuse. We're going to save all this money. I'm with you. I want you on my team. We're going to do all this. I'm committed, because Donald Trump wanted Elon's support. He wanted Elon's money for the same reason he cozied up, to the crypto community, right? He wanted all the Bitcoin money. He wanted their votes, right? He is a great politician, even though he just started, because he's a great salesman. He's a great people person. From what I know, I've never met him, but the people that tell me that they've met Trump, that they're taken aback by how nice he is, how important he makes them feel, how you're the most important man in the room, how he even when he goes to a company, he meets people, and looks them in the eye and talks to them. And he's a good schmoozer, right? He's great with people in person. And so I think that Elon believed a lot of the stuff that Trump was telling him. And so he went to Washington with these expectations. And when he got there, and Trump no longer needed Elon Musk, right? He's in the White House. He's the president. He can't run again. So he doesn't need Elon's support for re-election. And so Elon is not nearly as important to the president as he used to be, right? And so that dynamic probably changed. And Elon is there trying to get these cuts. And Trump is not cooperating. Trump is listening to his other advisors that don't want the cuts. Because again, and I pointed this out, all the money that's wasted, right? All the fraud, all the abuse, somebody benefits from that, right? It's not in the code by accident, right? All these wasteful programs are not there purely by chance. They're there because somebody wants them there. And the reason they don't eliminate them is because the people who are benefiting want them there. So I'm sure what happens is whenever there's an effort to eliminate some program that's wasteful or that has a lot of fraud, the people who are benefiting from the waste and committing the fraud call up the congressman in their district, and you better vote against this. If you want to continue to get my campaign money, you got to kill this thing. And if you don't do it, I'm funding your opponent in the next primary, right? So all these politicians preserve all this. Nobody wants to step out on a limb because unlike Trump, every member of the House needs to be reelected in under 2 years, and they all want to stay there. None of them want to give up their seat on this gravy train. They love the lifestyle, the power, the prestige. Even the people that go to Washington, honest, right? That actually go there. Hey, I want to make things better. I really want to serve the country. On both sides, right? Republicans and Democrats. Idealistically, somebody goes to Washington with good intentions. When they get there, everything changes, especially if they want to stay there, right? Because once they get there and they like it, they don't want to lose their seat. Well, in order to stay there and get reelected constantly, you need money, you need support, and so you need to basically grease a lot of palms. You have to act what's in the special interest of the key constituents that keep you in office, not in the general interest of the country. So, and if you go to Washington and you vote based on what you think is good for the country, you're not going to stay in Washington because you're going to do a lot of things that get you in trouble with a lot of people that want to get rid of you. And so your opponent is going to win. So the ones that have succeeded, by and large, it's not everybody. You got a few exceptions, but they're few and far between. But most people that have been in Congress 10 years, 20 years, 30 years, right? They're there because they played a game. If they didn't, they would have lost to somebody who did, right? And a lot of them rationalize this. Yes, they know what they're doing is wrong, but if I don't do it, I'm going to be voted out of office, and the guy that replaces me could be even worse. So in order to prevent somebody worse than me from taking my seat, I got to hold my nose and vote for all this crap. But I knew this was coming. Elon probably didn't, not that I'm smarter than Elon. I'm not even in the same ballpark as Elon IQ wise, but I've been following this stuff. I'm older than he is. And, he's had a lot on his plate. He's been running all these companies and he's, became the richest man in the world. He didn't have time to really think about, the history of politics like I have, right? I spend my time doing that. I'm not sending rocket ships into space, right? So I think in this area, I think I'm a little bit more knowledgeable than Elon Musk. He was a little bit more naive with what he expected. And so here's Elon Musk, and he's sitting quietly watching this big, beautiful bill pass the House and watching everybody lie about it, how great this bill is, right? How this is a game changer. For the first time, we're changing the course that we're on. We're cutting spending. They're cutting nothing. Spending is increasing. Yes, technically, if the spending cuts to Medicaid that are scheduled to kick in 2029, if they actually kick in and all the economic assumptions are met where we have no recession at all during the next 10 years, then yeah, I guess there would be some reductions in the rate of increase. They're not talking about actually spending less. They're talking about spending less than they plan to spend, right? It's like I'm planning on increasing. Let's say I'm a family. I'm doing my budget, and I said, okay, last year I spent $2,000 on entertainment, and now I'm planning on spending $3,000 next year. And then I find out that, look, I'm having some problems. I have to cut back on my spending. And I say, well, okay, instead of spending the $3,000 next year that I planned, I'm going to cut that back to $2,500. And therefore, I'm spending $500 less. No, you're spending $500 more. You spent $2,000 last year, and now you're going to spend $2,500. Yes, it's $500 less than you were planning on spending, but it's still more. But in Washington, that counts as a cut. Right? You can increase spending and take credit for cutting it, right? So that's what this bill does, right? It's all a bunch of smoke and mirrors. Those cuts are never going to see the light of day. And all those congressmen know it. Because if they really wanted to cut, I see these guys going on television talking about, yes, we want to make able-bodied people who are getting Medicaid, we want a work requirement. We want them to have to work. Okay, then why don't they have to work now? Why can they not work until 2029? The reason they have until 2029 is because Congress has that long to cancel the requirements, which is going to happen. Because if they really were serious, they would have the cuts right now, right? But Congress has been doing this as long as I can remember. They always cut taxes now and cut spending later. And the promised spending cuts never materialize, right? So the deficits are always bigger. I've been hearing from the beginning, we have to have a bigger deficit now as a down payment on future surpluses. Yes, we're going to stimulate the economy with these deficits, and that's going to, the tax cuts will stimulate the economy, which will ultimately pay down the deficits. It never happens, right? Yes, they're saying that now. We have to take into account all the economic growth that we're going to get from these taxes. They've been cutting taxes under the same premise the entire time. The national debt's been rising to $37 trillion. And it's probably $38 trillion because, again, we're not, we don't know what it is right now because we're above the debt ceiling and they're playing all kinds of games. And so we don't really know what the actual national debt is. We just know that it's going way up. And by the way, most of these tax cuts are not growth oriented, right? To really grow the economy, we need tax cuts that incentivize savings and investment, not more spending. So when you take away taxes on tips, waiters and waitresses aren't going to, use that money to fund capital investment. They're going to spend it, right? They're going to buy consumer goods, right? That doesn't grow the economy, right? That's just more of the problem. Excess spending is the problem. We're going to spend more, right? So prices are going to go up, right? We're not going to get more productivity out of these tax cuts, right? We're going to get more spending. We're going to get more inflation, right? So it's not going to pay for itself. We're going to just continue these policies. So Elon Musk is seeing all this, and I'm sure it's driving him probably more crazy than it's driving me, because he invested hundreds of millions of dollars, which I guess to him is not that much, but he invested a lot of time into electing Donald Trump. He was probably made a lot of promises by Donald Trump, and Trump is reneging on those promises, right? Yes, he initially brought him in because Trump wants to, hey, I'm delivering on my promises. I'm doing what I said. We have the Doge, right? We brought Elon here, but it was all for show. It was all part of the Trump show. None of it was real. But Elon Musk didn't know it was a show. He didn't know it was an act. He thought he was really there to cut government spending, not just part of this reality show where Trump could pretend as a photo op that he's doing this, right? That's part of his persona and part of what he's selling the public on, that he's, delivering on his promise. So he got very frustrated. And finally, he couldn't take it anymore. And he takes to X and he puts out a post. That's it, right? This is an abomination. This is anybody who votes for this, you guys did wrong. You know you did. If you vote for this bill, you shouldn't be reelected. That's exactly what I've been saying the whole time. I've been calling a spade, even on his platform of X. I've been saying this bill is a lie. This bill is a fraud. The whole time, Trump and the media, the Republicans, are talking it up as, this big, a deficit reduction bill, right? I've been saying it's just more of the same. And now Elon Musk recognizes it. But what's significant is that Elon Musk told it to not only 220 million followers on X, but he told it to the whole world. This is a big story now. Not only that, but because of the back and forth, because the minute, Trump did this, Elon Musk did this, this really pissed off Donald Trump. Because, one thing that Donald Trump values most is loyalty. And so when he sees Elon Musk publicly calling him out for the fraud, this is his baby, right? His signature bill. He's like taking credit for it, right? This is his legacy, this great bill, right? That he's selling everybody on. He must have just been livid about this. And then he starts, well, Elon Musk, he was wearing kind of thin. I had to get rid of the guy. He's probably got Trump derangement syndrome. Now that he's gone, he misses being here. He's kind of pissed off. He starts, going after him. And then, so now Elon Musk is like, oh, you're ungrateful. He's saying, I'm the reason you won. Trump was like, well, I didn't really need his help. I would have won anyway. I've done so much for Elon. I really helped the guy out. They're going back and forth. And to the point where Elon is like, all right, that's it. I'm taking the gloves off. The reason that the Epstein files haven't been released is because Donald Trump is there, right? Implying that he might have had something to do with what was going on there. And that's a pretty big can of worms to open. And you really can't, put those worms back in the can once you've opened it. Then, of course, over the weekend, Donald Trump is threatening to retaliate against Elon Musk, which is a problem. People should be critical of that because, people are, because Elon is like, well, I'm going to maybe help fund campaigns when people want to run against the people who vote for this big, beautiful bill. And he's also talking about starting a third party, which he doesn't really need to do. Just take over the Libertarian Party. I'm sure they're more than willing to cooperate, with Elon Musk, because that party already has an apparatus. They're already going to be on the ballot in all 50 states. So you don't have to waste all your money trying to get on the ballot. Just get candidates that you like to run on that ticket, and you've got something. And the Libertarian Party's never been able to make a difference, but they've never had Elon Musk. They never had a guy with his stature, with his reach, with his money. So he may be able to help put some libertarians in office to really, disrupt this machine. So I would encourage Elon to maybe work with libertarians. They haven't been successful in the past, but this could actually be a game changer. Now, of course, he could try to get libertarian-leaning people to run as Republicans and then back them, and so that would work. That would work too. But I think a third party is probably the hardest way to go, especially since he said, "I want a party in the middle." Like we need a party to represent the middle. We don't need to be in the middle of the Democrats and the Republicans. First of all, there's not much daylight there. There's very little substantive difference between these parties. That's the problem. We need to get out of the middle. We need a party that stands for individual freedom, liberty, right? We need a party that really wants to shrink government, not a party that wants to be, similar to the Democrats and the Republicans. So I really want to get way to the right of the Republicans, right? The Republicans are too far left. The whole spectrum has moved. Today's Republicans were like yesterday's Democrats, and yesterday not all the way back to, Grover Cleveland when the Democrats were actually the better party. But just, for my lifetime, Lyndon Johnson and Nat Wing, Hubert Humphrey, McGovern, the real, that part of the Democratic Party versus, Reagan, right? We've moved. So the part, everybody has moved left. And so we don't need to get in between that. But so the key is, though, now that Elon Musk has basically shined a light of truth on Trump and the big, beautiful bill, all the expectations that people had that this was a game changer, that we were finally going to get our fiscal house in order, that we were finally going to cut spending. All those expectations should be out the window. This is business as usual. That means the debt is going to continue to run up until we have a sovereign debt crisis, right? The dollar is going to implode. Inflation is going to run away. None of these facts have been altered by the election of Trump. Nothing has been changed by Elon Musk and Doge, right? And in fact, it's just going to get worse because all of the spending increases under Biden that took place after COVID, they're all preserved, right? When all these Republicans want to talk about all the damage under Biden, well, okay, they're not undoing any of it. They're preserving it all. And every time I hear them say, well, you know, the economy was really screwed up because of Biden. We can't get it all done at one time. This budget is just the first step, and then we're going to do more. No, they're not going to do more. They're raising the debt ceiling by $4 or $5 trillion, so they don't have to do more. This was their chance to do something, and they're doing nothing. In fact, they're doing worse than nothing. They're making the problem they inherited worse. And you can't just say, well, it's just so bad because of Biden. Biden didn't really do anything that Trump didn't do, and he didn't do anything that Obama didn't do. And Bush, they've all been playing the same game. They've all been kicking this can down the road. They've all been making the problems worse because the political consequences of trying to solve them are too great. And that hasn't changed. None of that has changed since Trump was elected. And Elon Musk is letting everybody know. When I was saying it to my small audience, didn't make a difference. But when Elon Musk, who has a much bigger soapbox, is letting the world know that this is all a game, it's all a smokescreen, that we're going to have a debt crisis, we're going to have a dollar crisis, that is going to accelerate it. And so I think we're going to see another leg down in the dollar. This is going to accelerate the selling pressure on the dollar. It's going to accelerate the selling pressure on U.S. Treasuries as people want to get out because they realize that there is no hope. And so they're just going to continue to flood the market with supply. The Fed is ultimately going to monetize it with massive inflation. So the bond market's going to drop, the dollar is going to go down, and the precious metals market that kicked into another gear this week with the breakout in silver and platinum, that is going to continue. So I think there's even greater urgency at this point for people to get into the metals and get out of the dollar before these trades get further and further or run further and further away. Anyway, that's it for today's podcast. Again, if you like the podcast, don't forget to give me the thumbs up. If you have any comments about it, and subscribe to the channel. You know, I still don't have 600,000 YouTube subscribers. I mean, I can't imagine what's taken so long for more people to subscribe to this channel. I think it's been a couple of years and I've been stuck just under 600,000 subscribers. I don't know if that means a lot of people are unsubscribing, and so it's just kind of leaving me the same. I'm getting new subscribers and it's kind of offsetting the ones I lose, but I'd like to break through that number. So if you're not a subscriber, subscribe to my YouTube channel and tell your friends. Your friends should also be subscribing to my channel so they also can hear the truth and understand the nature of the problems that we have. And so when they get much worse, they understand who to blame them on. They understand that it's not capitalism, it's not deregulation, it's government, it's central bankers. They're the architects of the collapse that's coming, and they're not going to be the architects of the solution. Any government-created solutions to government-created problems will only make them worse. The only way to solve these government problems is with free market solutions, and those are the ones that I talk about. Bye for now.